All right, Tasty Crypto Show. We're back.
We're back.
Yeah, I guess it usually starts. We're back. Tasty Crypto Show. I messed that one up. With me today, my quant, Glenn.
Well, thank you, Ryan.
Yeah. Looking very studious over there in your glasses.
Thank you. Yeah. This week I decided to, hit it hard, really buckle down.
Like you hit it so hard this weekend that you can't see, and now you have to wear your glasses, or what do you mean? You do something crazy this weekend?
I slept in my contacts, if that's crazy.
Okay.
Yeah, that was a mistake.
Sorry to hear that. Going so hard, you slept in your contacts.
So hard.
I'm connecting the dots, Glenn.
I
understand what
I went to all-you-can-eat sushi.
Okay.
Which
there
I know you're a fan of.
Yeah.
My friends did not put up as strong of a fight as you did, Mr. Grace, a true outperformer against the nigiri. But yeah, it was good. Your weekend? Fine? Good?
Yeah, it was pretty good.
All right.
I pulled a triple header at Le Tap.
Did you now?
Aberdeen Tap. Yeah. No, and we've got, shout out. I think he's watching the show. I hope he's watching the show. Lawrence, another member of the Tasty Crypto team, is here in the office, in the flesh.
All right.
From a little town in the UK called London.
All right.
Yeah, I guess.
Cheers, Lawrence. Pleasure to have you.
So shout out to Lawrence. Shout out to anybody that's watching this on YouTube. The stream is live. That means the chat is live. So I don't know, say something. Tell us where you're from, what you're up to, or post an emoji or something. I don't know what you do.
Tell us how hard you went this weekend.
Yeah, let us know how hard you went this weekend in the chat. What'd you get into? Let's jump into it, Glenn. Got a lot to talk about. I believe there's an FOMC meeting this week.
I believe there is.
Fed meeting to end all Fed meetings once again.
I think this time it might actually be.
You think this is it? This is the end?
Not the end, but I think something might actually change.
The end of Fed meetings. Yeah. I believe if you look at the CME's FedWatch tool, which is a fantastic piece of software.
Really great,
by the way. They've got a 50 basis point cut that's being priced in at the moment. So take us to roughly 5.5% in terms of the average Fed funds rate from, kind of the target range right now, close to 5% or 5.5%. Go
Quite the flip
5%
there,
from
yeah.
5.5%.
Yeah, definitely seen a lot of back and forth there.
Yeah.
Entered the weekend, right around 50-50.
Yeah, kind of 50-50, but it looks like, I think as of right now, we'll have to double check if that's changed, but it looks like you're going to get 50 bips.
You think retail sales data tomorrow, that does anything? We see strong...
Shakes us out of that 50 basis point
strong
cut.
Spending, you think everyone says, okay, fine, just 25.
So. I think it's
25 is okay.
It's baked in the cake, as they say. But over the weekend, we've got a spot price of Bitcoin right now, 57.8. My numbers might be a little bit off here from when I ran these. If you watched Options Trading Concepts Live, we talked about this for a little bit earlier today. But flirted with 60,000 and then boom, right back down.
What the hell?
Well, we've talked about it. The macro environment that we're in, I think, is one that's maybe more conducive to trading around your core position, taking some profits. There's a lot of ways that you can kind of analyze this, but I think even just looking at sector performance, looking at the correlations that we've talked about, looking at momentum here, this just hasn't been a very bullish environment.
Yeah, so you think some profit taking around that 60,000? People saw it.
We've
for the first time and
sold into. Really any rally here has had a hard time kind of moving higher. We've talked about following those momentum indicators. We like to look at exponential moving averages over multiple time frames. Those have broken down. Somewhat concerning that you're seeing this on intermediate time frames. And you look at the price of ETH versus Bitcoin. So Bitcoin has held up relatively speaking, but everything else is trading pretty poorly. Wow. Right? It's pretty weak out there, Glenn.
Yeah, I mean, 1 week, seeing that ETH Bitcoin pair down 6%, we thought that was already at the bottom.
Yeah, I want to talk about that today because that continues to push lower to multi-year lows. We can discuss, how to set up a trade that'll take advantage of that spread. If you do think there's going to be a pop, you can actually get long ETH futures. There's the micro futures that you can trade with the CME. You can trade those through the Tasty Trade platform. And then you would sell Bitcoin futures or micro futures against it to create that ratio. And you have that trade that, you're not just on one side of it, but you're really looking for that outperformance. You do have, I suppose you could consider it the Bitcoin side, in short there being some sort of offset to just a continuously declining ETH price. But what you're looking for is relative outperformance of Ethereum versus Bitcoin. You've seen the exact opposite.
Yeah, and some interesting little math there with the sizing, but
yeah, we could talk about you kind of almost have to do it like 18, 19 to 1, but basically look at the notional size of the contracts and kind of set it up from there. It's pretty straightforward. But yeah, it's not good out there, Glenn, and I'm sorry about that.
It's all right.
I know I talked you into putting everything you got into this like a couple months ago, and well, here we are. Down 35% in 3 months in Ethereum. Not good.
That's all right. We'll have blast off mode eventually.
We could get there. Yeah.
Still waiting, but yeah, really interesting. We've seen this trend over the weekends. I start thinking I can spend money that I don't have on Mondays, Ryan. I wake up on Mondays and it's all gone.
You're feeling pretty good ordering those shots on Saturday night.
Exactly.
Yeah. So that's just a quick look at what's going on in the market. I think one thing to note here is, again, we've seen pretty bearish momentum. That can change, obviously. We'll see that trigger on the daily first. So while we've had some bearish momentum on the weekly, kind of just still chopping around when you look at those shorter term time frames. Bitcoin's range has been 50 to 70. This is something, again, where if I look over here on my other screen, over the last year, the price of Bitcoin's up over 100%. Okay, right. So let's take that into consideration. I'll just put a yearly chart in here. You can see, obviously, we blasted off. Let me get all this off of here. And, we've continued to try to slide lower. Here's that range, about 50,000 to the downside, call it roughly 70,000 or so to the upside. It's been a tradable range, albeit, with a kind of bearish lean here, but anything could happen. These things can move very, very quickly. As we know, that could be a quick move to the downside too, but up over 100% on the year in the midst of, certainly a bit of a correction here short term. But I think when you trade this stuff, and the longer that you've been in the space, the more you just get used to it, you can stomach the volatility. You have to be able to withstand the 20% drawdowns, because as we've shown on this show, it's pretty normal.
Right.
On a weekly basis, it actually happens a lot more frequently than you would think in terms of those large moves. Most of the time, it's skewed to the upside in terms of where the volatility materializes. But you do get big moves to the downside. There is some continuation. We'll talk about whether interest rates have an impact on that or not. We'll look at a few periods where there's been a crash here. But yeah, just has not obviously been a bullish environment. Implied vols coming in a little bit, which gives you slightly smaller ranges, though price has fallen at the same time. So if you've been following the show over the last few weeks, expected move for Bitcoin's been somewhere between $4,000 and $4,500.
Right.
ETH 197 gives you a spot price in terms of the range of about 2,100 to, let's call it, about 2,500. Has not been able to really break and hold above 25. I know how that makes you feel, Glenn. Again, apologies.
It's all right, but yeah, it's really surprising with that Solana coming in a lot.
Yeah, Solana's come in a lot. It takes us back down to where we were previously. And if you guys could throw up the slides here, we've got the expected moves that we're talking through. But Solana at the lows of this range, it's pretty wide range there too. You could get back down to where we saw buyers step in. If you go back to the beginning of August, you had the whole kind of volatility spasm in the markets. That said, just quick look at our short-term asset correlations, cross-asset correlations here. Continue to see some strengthening correlations between equities and crypto, specifically Bitcoin here. I think that, again, is reflective of the environment that we're in. We talked about that macroeconomic backdrop is more so in the driver's seat right now. Growth and inflation matter. Maybe the Fed is being a little bit proactive here with a 50 basis point cut. We'll see if there is some sort of soft landing. I have no idea, but it's certainly in the face of slowing rate of change of inflation, and you've seen GDP estimates come in a little bit. But there has been that fiscal impulse, that fiscal driver that's kept GDP growth relatively strong.
Definitely, but yeah, kind of a breakdown in that 15-day with the dollar. We saw that.
Yeah.
That was ripping for a couple of weeks.
Yeah, the dollar has pulled back quite a bit here, which I think, has been to the benefit of gold, but really hasn't benefited crypto hasn't benefited Bitcoin,
Yeah,
which
our
maybe
safe
a bit of
haven
an outlier.
cryptocurrency. Nobody's going to our safe haven cryptos.
Yeah, well, in the crypto space, look, if you have an asset allocation to crypto or you're trading in here, I think you want to be in Bitcoin for now. Here's that ETH Bitcoin ratio. Continues to trade lower. We're looking at this going all the way back to 2021, not quite at those levels, but well off of where we were. So if you think, and if you go all the way back to the left-hand side of the chart here, you look at kind of probably was it March, April of 2021. I mean, this can go and it can move very quickly.
For sure. Qualitatively, do you remember 2021, that big spike up in this chart? Was there the news around Ethereum? Was that a big ETH story around that time, or?
I'm going to have to go back to another chart on the other screen here and just see what the price of Bitcoin was doing there. It might have just been, if you go back to May of 2021, we had, a lot of volatility, obviously, where you then pushed back up into those same highs that you were at. And then ultimately, this collapsed post FTX. But I mean, just looking at this chart without qualitatively like what was going on at that time, I'm trying to remember. I know, you started to see a lot of activity in DeFi, so you did see some ETH outperformance and maybe as well, you did just see that quick move in Bitcoin. So what this could be, right, is this could just be reflective of a massive and a very quick move to the downside in Bitcoin and less of that volatility or magnitude of a move in ETH. But
no,
I wish I could answer your question better.
Yeah. No, I just wrote in kind of ETH's life cycle, if that was big news for ETH or
I don't recall.
Yeah.
But I think
retreat in Bitcoin.
Point being, look, there are trading opportunities here. You do minimize risk when you have that ratio on. If you do that with the futures, so you could have this trade on and hold it, and you could size it so that it's very small, and then maybe you do get these pops. But if you've been trying to trade that, I mean, there's only been 1 or 2 periods where that was a decent trade for just a week, a couple of days, really. Go back to May, that was the last time that we saw this. But it's been in a pretty bearish downtrend since 2023, since 2022, really. So again, you look at Bitcoin market cap dominance, 57%, 58%, close to it. Everything else has just been a disaster. Is probably the best way to put it in terms of just, you had a nice rip at the beginning of the year and everything sold off 70, 80+%. That's to be expected. Some of this stuff has such a small market cap. It's early stage, is very, very volatile. But if you're looking at this period that we're in and you want to have an allocation to crypto, at least at this point in the cycle, it's been Bitcoin over everything. And that's been the theme since we've been doing this show for the most part. That has not changed.
Definitely.
That said, what's behind that Bitcoin performance? At times, it's certainly been the ETFs, and you've seen that slow down a little bit as well. I think over the last week, you saw nice inflows into Bitcoin investment products.
Yep.
Ethereum, really not so much. Also probably, again, reflected by certainly by what we're seeing in terms of price action. But another area that we'll keep an eye on, and I think at some point this changes.
For sure, yeah. No real news out of the ETF world as of late. I know you raised a story a couple weeks ago on some options. Nothing new there.
Yeah, I haven't seen anything in terms of news flow. Might be that I missed things as well, but haven't seen anything related to any updates there. Presumably, at some point in time, in the future, over a long enough timeline, I suppose, we will see derivatives. We will see regulatory clarity. We'll see more participation. But for now, we're really in this lull, and that might continue until we get post-election. You see that with equities as well, where at least historically, that's kind of been how things have traded. Peak ahead of the election, maybe trade sideways to down, and then blast off mode, Glenn.
Okay.
But we've done a couple shows. I don't remember exactly which one it was, but a couple times now we've highlighted seasonality in the crypto markets. I know that the fantastic team on Tasty Live talked with Nick Batista, and Mike Butler this morning, and they've done some work in cherry picks around seasonality in the equity market. And September at times can just be a crap month.
Yep.
And you see that with Bitcoin, especially. August and September are not historically great periods. And maybe that's just what we're going through. We'll get through it. And then, you'll probably like me a little bit more than you do, Glenn.
I hope so. Yeah, that's interesting on that seasonality, even in Bitcoin. I mean, every month I'm putting my retirement in it, so that doesn't change. In
dollar cost averaging, that is, I think that's the name of the game for long-term investors. That said, you think about catalysts. We started the show off alluding to the Fed meeting to end all Fed meetings here today. It'll be on Wednesday. You'll get your FOMC announcement. You'll get your press conference with Jerome Powell.
A new dot plot as well.
New dot plot, projections. It'll be analyzed every which way. Not that it matters, and the market probably won't go anywhere. Who knows?
What do you mean, Ryan?
Who knows? But, we talk quite a bit about the impact or the perception of the interest rate impact on crypto, on asset prices. And I want to look at that in a little bit more detail here today because I think some of the takeaways are interesting. And, this is a surface level analysis. You can pick out very specific points in time. You can look at what happened after 3 months after a cut or a hike or 6 months, or there's a lot of variables. But if we just isolate the interest rate variable, what do you think, Glenn? Is there a very strong positive correlation between rates? Is there an inverse correlation between rates and crypto? No correlation? What do you think the impact of interest rates really is, or interest rate policy, I suppose, on crypto prices?
Yeah, I mean, when you take a step back and think about it, you think, sure, cyclically, maybe low rate environment, things are better, everything's rosy. Sure, crypto, that sounds cool. More money, more money. But I think you have to overlay it with just this sector growing as an asset class.
Yeah.
And if this data, however you cut it, is just too convoluted to really isolate if these rates matter. And I know you did some number crunching I'm excited to see, but yeah, I think it is just hard to tell. I think lower rates shouldn't be bad necessarily unless we're, in sinking, save the ship mode. But yeah, I don't know how much of a positive effect, at least coming down, we'll see. What do you think?
Yeah, that's a good point. I mean, I think on the surface, right, the assumption would be that low interest rate environments are conducive to asset prices. Crypto being a highly volatile asset, then you might see more upside in those environments. I think when you look at it from the risk perspective, today I can put my money into a money market fund. I can put my money into short-term treasury bills and get maybe 5.5% annualized. I can put it into a high yield savings account, get 4.5% or so, right? There's definitely less of an incentive, I would argue, unless you're just wildly bullish, like a couple people I know. But there's definitely less of an incentive to go further out on that proverbial risk curve when you can get 5.5% annualized risk-free.
Free money.
I mean, the risk is that the U.S. government defaults. I don't know, we seem to be inching closer to that, but I'm kidding. But, why would I go and do something highly speculative, highly risky when I can get 5.5%? Now, maybe there's an argument around, well, you can get 30%, man. Go into these liquidity pools that we've talked about. Sure, not with everything you've got, but you're probably going to put a larger amount of money into something like treasury bills when they're 5.5%, 5%, whatever, versus when they're 0.25%, right? 0.25%, you're an institutional investor, you have a yield bogey. You have to, satisfy every single year. Well, you've got to find alternative investments to treasuries. You might pile into treasuries when yields are much higher. It's really as simple as that. And so I think the expectation would be that crypto doesn't trade as well, even though, we're looking almost at all-time highs, $10,000 off of all-time highs for an asset that's roughly $60,000.
Not too bad.
So it's done okay, kind of regardless. But I think, when you look at this on the margin, from the liquidity perspective, from the interest rate perspective as well, you really need an environment where you're out of that high interest rate environment and that's sustained. And the expectation is that you stay there for people to really get pushed farther out on the risk curve. And so I think there is something to that. But I wanted to look at just over the last, say, decade or so, or maybe more than a decade. Let's see what we've got here. Going back to 2011. And again, this is kind of surface level. We're just taking the average Fed funds rate for the year and looking at what Bitcoin did and trying to kind of derive any, real sense of whether it matters, okay?
Percentages are insane.
Yeah, and here's the other thing to consider, right? You've got an asset that was, a few pennies at one point, a couple dollars, and it goes to 20,000 in one cycle and then goes down 80%, right? I mean, this is some crazy stuff. There isn't much that behaves or trades like this. And so those percentages, I guess, in some ways are kind of skewed by that. But you look at the performance in these very low interest rate environments, and then you would argue, okay, well, maybe there's something there. But then you go from, 0.1% to 1%, and you're still moving higher. Now, we'll talk about these few crashes here. You have a crash in 2014, down 61%. 2018, down 73%. Maybe it was a little bit more. And then 2022, down 64%. And I'm just looking at this in terms of I got monthly closes. So there could have been points in time in the middle of the month or whenever where you were at, lower lows in that sense. But it's hard to argue that, whether rates were 0.1% or 5%, there's much of, an impact on what's happening with crypto prices. And I think that's also true of the S&P. If you look at this over a long enough timeline, that shift in interest rate policy might have some influence on capital allocation decisions, but it doesn't necessarily mean that it's not binary.
Right.
When rates are really high, the market sucks.
Still
and
up
vice
and to
versa.
the right.
Exactly. So I thought that was kind of interesting. And I do want to talk about these 3 periods and really kind of dig into maybe what drives at least some of that, the negative or, the underperformance, significant underperformance. Sure, there are times where I would much rather get that 500% up move. And I think you're going to see that happens less and less as we go forward.
Yeah.
So you definitely want to be in the market when you have those years. But ultimately, you just want to be out of this or kind of risk off when you start to notice that this is really moving to the downside and could accelerate. And it's tough to time. But there have only been a couple of periods. This is kind of a really wild asset where the thing can go up thousands of percentage points. And then from that level, whatever that level is, right? If the first time around it's 1,000 and it goes down to 200, it goes back to 20,000 and goes down to 10,000. Goes up to 60,000 and back to 5, whatever it is, it's wildly volatile, but over a long enough period of time, like anything, I suppose, you've done okay. You just have to manage risk at certain points in time. So not a clear takeaway here around any significant impact on rates. You could argue that as money becomes more expensive, it exposes cracks in the system. And we'll talk about some of these, kind of drivers of the downside in a second. But I want to just look at really quickly a couple of periods where we saw outsized changes. And sometimes these are very short-lived periods. Other times, it's over a couple of years. It's a 36-month period or whatever. And the other thing that's difficult about this is Bitcoin hasn't been around that long.
Exactly.
And some of these interest rate cycles are just wild.
Right.
This most recent one being the fastest increase in interest rates given the inflation that we haven't seen since the 70s. And yet, crypto ripped higher after we stopped raising rates. It didn't do very well during that 2022 period. But as soon as we got the signal that Jerome is done, my friends, it took off, right? And then, you got the ETFs at the same time. So which one is it? But again, just look at this, okay? Up almost 2% from 2016 to 2019, 1,500, 1,600% return. Cut rates, down 2% from 2019 to 2021. COVID happens, right? So there's all of these other variables that have to be taken into consideration. Up 1,100%, almost 1,200%. Rates up 1.6% from 21 to 22. Down 43%. Okay, maybe.
Maybe.
2022 to 23, up 3.34%. Down 8.5%. Okay, and then again, 2023, 2024. Rates haven't changed much. We had one last hike here throughout that period, and then we were signaled that it's over right at the end of 23, if you recall. And since then, Bitcoin, over that period, going all the way back to the beginning of 2023 to present, up 256%. On a one-year basis, up about 117%. So what really drives these downside price action or price moves? It's not so much interest rate hikes. It's things that are specific to the industry. Right. So if we just quickly touch on this before we wrap things up, Bitcoin fell 60% in 2014. That was Mt. Gox. That was also the fact that the market went from, in this thing that nobody really knew what the hell is this stuff. It went from 100 to 1,000. It corrected. Okay. Right. Maybe that was going to be the end of it. Well, it wasn't the end of it. So we get to 2018. If you were in this in 2017, it went up to about 20,000 or so. You had ICOs left and right. You had fraud left and right that invited regulatory scrutiny that still arguably exists today. And it was just extremely speculative in nature. I mean, that was really the first massive bubble. And then it corrected. But these things just don't correct 20%. They correct 80, 70%. And in some cases, depending on the token, even more. And most recently, 2022. So sure, the macro environment does play a role here, but maybe it's, the beginning or the sense that we're going to get interest rate hikes here that exposes some of the cracks. But what we saw was the Terra Luna ecosystem just absolutely blow up. Right. So, the domino effect there where you had all of these other kind of centralized crypto companies that were just partaking in basically shadow banking. And, that blew up as a function of the Terra Luna Three Arrows hedge fund collapse. And then FTX, well, we all know what happened next. And as a result, you get a lot of forced selling in those periods. It's completely detached from anything that Jerome Powell might be saying in a press conference. It doesn't matter when the biggest crypto exchange on the planet or one of them is, found out to be just a completely fraudulent operation. Right? You went all the way down to, I think, 15,000 or so if you look at spot Bitcoin prices.
But from this, is there perhaps a flip side of the coin? Like this, obviously, another instance of industry-specific news leading to a bunch of price action, but maybe a global macro catalyst here to the downside. Is there a rosy storyline where we see Jerome Powell navigate us to a soft, smooth landing and some positive industry news, some maybe regulatory, innovation-wise, it comes out of it and you can connect the dots?
Yeah, look, I don't assign a really high probability personally to, cutting interest rates and things not kind of really slowing down, or the reason that we're cutting them. Quite often historically, we see that when you start to cut, those rate cut cycles are pretty rapid relative to, the hike cycles. That said, I think definitely there could be an environment where certainly you get regulatory clarity, you get more participation in the space, and we take rates down a little bit here. We do it, kind of 25 basis points, 50 basis points here or there, and you get down to, 3%. And that's a level that we're comfortable with. I think that's what we're kind of pricing in into probably June of next year or so from a probability perspective when you look at Fed funds. And so, yeah, I think there is that kind of soft landing. There's definitely a historical precedent for points in time where we've cut rates and things haven't collapsed. It's just that quite often when you look back at shifts in policy, it's reactionary to something bad that happened and it's a big move to the downside. And so I think, again, if the market and the economy hold up, nothing crazy happens, something from a geopolitical risk perspective doesn't just emerge.
No fraud.
Then, yeah, you very well could get an environment that, eventually, maybe post-election, you have a little bit of certainty one way or the other, that could be very supportive. Certainly a lower cost of capital, cheaper money, more incentive to kind of get out of some things where it's pooled up in, say, money market funds, whatever, goes out into other assets. I don't think it's just crypto. It's supportive of asset prices. Absolutely. I would welcome that environment. I'm just concerned that, if you're betting on rates, I don't think you want let's take them down 75 basis points because things are really slowing down. Yeah. I don't think that's that's not let's also pour all our money into crypto.
Yeah.
Right. It wouldn't make much sense when you think about where we really need to see that large institutional kind of bid come from. My guess is that, most institutions aren't bidding up crypto in the face of an economic collapse. It's after the fact, and that we're going to go back to not just, and the other thing too, last thing I'll end on, is when you look at these other periods of time, it's not just rates. Mm-hmm. It's also, oh, by the way, the Fed was buying $120 billion in assets a month. Maybe that was more important. And what was happening in the financial system, what was happening in terms of liquidity injections, that was more important than whatever the Fed funds rate was, right? But it's been fun, Glenn. Thanks for coming on the show. As always, wanted to just hit on this and look at, surface level, just one point, and that's the interest rate variable here ahead of the FOMC meeting on Wednesday, but we'll see what actually happens. We'll do the show on Wednesday after the announcement.
Yeah, excited for that one. We'll see if we get an initial reaction, big pop maybe, or if people are just waiting for the election and other rates to get priced in.
All right.
Thanks
well,
for taking us through it.
It's going to do it for our show. Victor Jones is up next with the Price of Truth. So stay tuned. We'll be back on Wednesday. Until then, I'm Ryan.
I'm Glenn.
Peace.